Whether you're wrapping up your career years or just about to hop on the train, retirement is something you must have thought of. While there are many promising means of securing your retirement future, the concept of building an investment portfolio for passive income is one of the most enticing options. Hence the questions: how much do I actually need to be able to rely on dividend payouts alone? What's the fastest way to live off dividends? Let's find out. Alright, I'll start off by explaining how dividends work. When a company hits the jackpot and rakes in profits, it can reinvest, keep it in-house, or do something special, pay it out. Now for privately held companies, that profit might head straight to the owners. In co-ops, it's the members cashing in. But here's where it gets exciting. In the world of publicly traded companies, those profits often make their way to you, the shareholder. They call it dividends. Whenever you buy a stock in a company, you're officially a shareholder. And when the dividends rain down, you're in for a treat. It's your cut of the profit pie based on how many shares you've got in the game. Now here's the cool part. Dividends can slide into your wallet as cold hard cash, a digital high five or an old school check. Or they might throw some extra shares your way. How often does this happen? Well, that depends on the company, but most like to throw the party every quarter. Loving this video so far? Give us a thumbs up by tapping the subscribe button. So first off, how much do you need to actually live off dividends for the rest of your life? Here's the scoop. If you're dreaming of living the good life on dividend payouts, take your desired yearly dividend income, multiply it by 22 to 28, and boom, that gives you a ballpark figure of how much moolah you need to stash in your investment portfolio. Let's break it down with a real-life scenario. Back in 2019, the median income for American households stood at $65,712, as per census.gov. But fast forward to today, with the pandemic shuffle, the Great Resignation, and inflation doing the cha-cha, you can bet that number's taken a leap, thanks to the world post-pandemic and the Ukraine situation. Even toothpaste is $10 per tube. Can you believe it? So with these rising costs, there's less cash in our pockets at the end of each month for basic stuff. To determine the dividend income needed for retirement, start by figuring out your annual income requirements based on your desired lifestyle. Keep in mind that dividends are typically paid quarterly, so monthly income may require a mix of stocks with varied payout schedules. Also consider potential future changes like inflation and increasing medical costs. If your existing income supports your retirement lifestyle, use it as a baseline. Once you establish your annual income goal, divide it by the average dividend yield to estimate the required investment. For instance, if you aim for $50,000 annually and your average dividend yield is 5%, you need to invest approximately $1 million worth of shares, 50,000 divided by 0.05. Note that this is a simplified calculation, and taxes are another crucial consideration. If you've enjoyed this video so far, give a thumbs up and subscribe to our channel. It'll go a long way. Once you set up your annual spending goals, now you're on a quest to figure out the dividend yield that'll make your dreams come true. The mileage may vary, but we're talking a ballpark of 1 to 6%. The total dividend yield depends on its composition. For example, the Vanguard S&P 500 Index Fund ETF yields a 1.85% long-term average. Ford stock yields a 4.88% average over the last 5 years. And let's not forget the Schwab U.S. Real Estate Investment Trust REIT ETF, proven at 2.67% over the last 5 years. While historical yields can give you a sneak peek, predicting future dividends can be a bit difficult. But you can head over to your brokerage's asset page or some trusty independent databases to get the lowdown. Now, if, after calculating, you realize you're aiming for a sweet $50,000 a year in dividends. AbbVie's stellar ride in the last 5 years has moved from $65 to $161. That's a dazzling 19.85% annual compound ROI. So say you've got a cool 100 shares of AbbVie. Toss these numbers into a high-tech dividend calculator, the current share price, today's dividend yield, expected increases in dividend yield, and the stock price's historical performance. Fast forward 10 years, and voila! Your stock balance is over $157,000, churning out a neat $10,000 in annual dividend income. But hold on, we're just getting started. Double the holding time to 20 years, and boom, your portfolio skyrockets to over $2.7 million, dishing out a whopping $386,000 a year in annual dividend income. All this from aiming to replace a humble $50,000 a year. Now that's what I call financial fireworks. Now, living off dividends might sound like a far-off fantasy, especially with all these rising costs. But here's the scoop. You don't have to throw in the towel just yet. Believe it or not, there's a swift way to make a living off dividends a reality, and it's not just wishful thinking. Most strategies involve a mix of tapping into bond interest and selling shares to cover expenses. Enter the famous 4% rule in personal finance. But what if I told you there's a way to snag that magical 4% or more from your portfolio each year without eating into the principal? Want to hear it? Alright, I'll spill right after you hit the subscribe button on your screen. Done? Great! Boosting your retirement income becomes a breeze by diving into dividend-paying assets like stocks, mutual funds, and ETFs. However, finding the right dividend stocks can be tricky, especially for small investors aiming for diversification. ETFs offer a hands-off approach. Use dividend growth ETFs if you're eyeing future dividend boosts, or opt for high dividend yield ETFs for instant income gratification. As those dividends roll in, they can nicely complement your Social Security and pension payouts, maybe even covering all your pre-retirement lifestyle expenses. With a bit of foresight, living off dividends is more than just a dream. It's a feasible plan. And the beauty? Even small investors can ride this dividend wave by crafting diversified portfolios with the help of ETFs. And if you're still hustling on the road to retirement, you can use your dividends to snag more shares of the stock game. More shares mean more dividends, and that cycle keeps on rolling. Let me break it down with a real example. Say you grabbed 1,000 shares of $100 stock, dropping $100,000 on the table. With a 3% dividend yield, you pocketed $3 per share in dividends, totaling $3,000 in the first year. Now here's where the magic happens. Reinvest those dividends to snag more shares, bumping your total investment to $103,000. Even if the stock price plays it cool, but the company cranks up its dividend by 6% each year, you're in for a treat. By year 2, you're looking at a yield on a cost of about 3.28%, reeling in about $3,275 in dividends. And guess what? It only gets better. Fast forward a decade, and you're cashing in a cool $7,108 in dividends. Hit the 20-year mark and brace yourself. You're riding a wave of over $24,289 a year in dividends. Now that's what I call dividends on steroids. For retirees eyeing that sweet dividend lifestyle, here's a playbook to turn those payouts into a powerhouse. Think high yield. We're talking about stocks and goodies like master limited partnerships, REITs, and preferred shares. Sure, they might not be the sprinters in distribution growth, but they pump up your current portfolio yield, making today's bills a breeze without parting with your securities. And if you're trying to avoid the struggles of income tax, stash those dividends in a Roth IRA, and guess what? No income tax headaches. Now, don't ditch the classics. Think Procter & Gamble, PG, and its dividend growth prowess. These stocks aren't just sipping tea, they're cranking up dividend income at or above the inflation rate. Sure, you might sacrifice a bit of today's yield, but it's all about playing the long game. Even if your portfolio isn't flexing its muscles just yet, those rising and steady dividend payments will save you eventually, so build patiently. And there you have it, folks, the fastest way you can live off dividends. Now, before you go, let's keep the conversation rolling. Have you ever received dividends? What's your go-to strategy for maximizing those payouts? Drop your thoughts in the comments below. We want to hear from you. Ready for your next financial adventure? Click on the video popping up on your screen, and let's keep this learning journey going.